TheoTrade. This is Don Kaufman. September 1st, 2021. 28 minutes left inside of today's trading session here on a Wednesday afternoon. S&P's up a staggering 5 points and have been fading throughout the course of this trading session. Might it finally be time to fade this marketplace? I'm going to explain that and much more here on this evening's video. Let's get to work. As I was saying, the S&Ps have been kind of fading for the most part throughout the course of the trading session. I'm actually going to give you some evidence to where this has much to do with retail trading activity, which I think you'll find quite entertaining here. Before I get there, I want to show you what this entire kind of trading week thus far has broken down to. Let's actually start with none other than the financials. Financials are off mildly today. It's, for the most part, in terms of a large sector, it's one of the weakest. And whenever the financials have tendency to have some sell side activity, or buy side for that matter, they actually drag kicking and screaming the energy sector along with it. But it's the financials against tech throughout the course of the week. So here we're looking at a daily chart of the financials, and I think the most appropriate way to actually, explain this is to bring up auto expected moves. Now, for those of you that are unfamiliar with auto expected moves, this is how the option market kind of depicts risk moving forward, meaning that these three lines are what the option market depicts risk to be. Nevertheless, if you take a look at the financials, they are through and to the outside of it's the lower expected move. So they're through the lower edge of the expected move. Now, great. The exact same time, take a look at the Nasdaq. The Nasdaq is the exact opposite. It's literally sitting, on the upper edge of its expected move. And again, these are weekly expected moves. So what this basically breaks down to, a pretty simple trade. You've got the Nasdaq, which is the QQQ, heading straight up, hitting the upper edge of its expected move. You've got the XLF, the financials, effectively breaking down, hitting the lower edge of their expected move. And the S&Ps, right, and here's the S&Ps, are literally skirting right through the middle. And it's one of the reasons you're just not seeing a tremendous amount of activity out of the S&Ps. In that little picture I just showed you there, I didn't even really bring up the S&Ps. Why? It's the S&Ps. What are they doing? Drifting listlessly higher. And this is where a lot of people, they kind of, there's nothing really going on in the market. No, actually there is. There's a fade going on right now in the marketplace, which I'm going to bring to your attention here momentarily. Before I do that, I do want to actually show you the advanced decline line. This is not really all that interesting or inspiring. The advanced decline line is a near 50-50 in here, which it actually makes quite a bit of sense. And most of the stocks that are up, though, are not up all that significantly. If you start looking down the list of the usual suspects, there's things like, for instance, Boeing, it's off a little bit, and Walmart is basically flat, and Target. And again, I'm just going down the list of the usual suspects. Obviously, some of the financials are down. There's even a couple of major tech stocks that happen to be down. The aspect, though, over here is you kind of feel like this marketplace has been impervious, and yet you're showing me a 50-50 advanced decline line. I'm going to take it a step further. I rarely bring this to light, but even if you're looking at the Nasdaq 100, right? It's the Nasdaq that has just been on fire lately, but even its advanced decline line is not positive. The entire marketplace, right? This week of trade has come down to nothing other than the monsters of tech. Now, the monsters of tech, that's that conglomerate symbol that we effectively built. And this is Apple and Amazon and Facebook and Google and Microsoft all compiled together. When I talk about a fade trade, right, that's what a fade looks like. This is absolutely critical. And I'm going to tell you something right now. You just don't see that price action nearly as much if you're taking a look at the NASDAQ futures or just any given NASDAQ chart in a daily chart. The chart that really does it justice, is looking expressly at the monsters of tech. And I cannot stress this one enough. this is a huge fade. This is a big reactionary high that we basically faded, and we're very, very close here with, again, just over 20 minutes left in the trading day, really close to the lows of the day. But that isn't so much of what I wanted to point out. The intraday fade is where there's a huge and critical trade going on right now. And to kind of explain this, I'm going to break it down to this. The retail traders, every morning, the bell goes off and they're just showing up like Pavlov's dog when that bell goes off. There is no other, better evidence to view than to look specifically at Apple. Look at Apple pretty much from the bell to current time. All right. This is what I'm talking about with the fade. And people, it is on right now. Initially, the fade that we're looking at, and again, a fade is effectively we're opening and exploding to the upside, and we fade throughout the course of the day. And that's, the fade trade. And this is right now an intraday trade. I believe it's actually going to start to proliferate through, as retail is dying out. Let me explain again exactly what that entails. As I said, bell goes off, and there are just massive amounts, of, again, when I say retail, what is retail? That's you, That's somebody sitting home, in mom's basement on a Robinhood account, and literally retail is using, market orders, and they are just buying calls at the cash open. So imagine if there was just a glut of calls to be bought right at the cash open. The bell goes off. The first thing the market making firms see, retail orders piling in with market orders. I'll buy calls at any price. And look at what happens to the price action inside of Apple. After, which that heavy retail trade, it just fades. And it has been fading day in and day out. We've actually been watching this activity. All right. But nothing explains it better than to look at the price action inside of Apple this morning, which opened, let's get crazy here and just forget the first minute. Let's say it opened at 153. Literally seconds later, it's trading almost 155. And these are huge moves in a short period of time, ultimately to fade back. Now, what I've actually been tracking, all right, on a day-to-day basis is the activity in the options. Like I'm literally watching the option market here into the cash open. And how that I know there are market orders that are coming in, people are trading at the ask or above. So in any given market, right, the ask over here, what is the ask? That's where basically you'll just say, oh, buy it at any price. And obviously, when you're trading at the ask or above, if a market is like 310, at 320, they'll just come in here, buy at the ask. If that's the ask, I'll take it. I'll take it at 320. You want fries with that? No, just give me at 320. And they're coming in literally at the bell, floods of orders. In fact, before I could even open this up this morning in option statistics, we were already over 55,000 contracts. Now, the activity that we're seeing in Apple is not really all that abnormal. All right, we're doing about 1.3 in terms of the call sizzle and about 1.4 in terms of the put sizzle. But what these numbers are, like 1.3, that's 1.3 times, the average volume in options that's been done versus the previous 5 days, right? That's what the Sizzle Index actually measures. Very few people know that. I helped actually build, some of the logic for this into thinkorswim many years ago. So what we saw, though, this morning was really interesting because the call sizzle this morning was just on fire and put sizzle was basically at nothing. And again, retail throughout the course of the day, they just dissipated. They disappeared. And when you didn't have that call buying, what you actually got is eventually a marketplace that started to slip back because all those calls that were purchased eventually have to be what? Well, people are turning around and finally selling them. And you're actually seeing traded at the ask or above, pretty much catching up to traded at the bid or below. It's amazing how very little is done between the market. Anyway, with that being said, we didn't just see it in Apple. We saw it in a ton of different products throughout the last couple of days. Started looking at NVIDIA, and one of the first places I really started to see this is in NVIDIA. All right, NVIDIA at the cash open explodes higher. Again, huge number of retail traders literally coming in here and buying calls at the market, only to see the marketplace kind of fade back. It's everywhere we look. And right now, if you wanted, again, put your finger on what is bringing the marketplace, and when I say the marketplace, the S&Ps, what's bringing the marketplace higher? It's just tech. Okay, the only thing standing between us and the abyss right now happens to be tech. Now, I would not be surprised at all later this week to see maybe the financials rally back a little bit, right? And we all know that we're going to have some jobless claims number on Thursday. We're going to have non-farm payrolls on Friday morning. People, those are just catalysts. At this point, there is, again, a bit of a fade trade going on. Retail looks extraordinarily tired, from Microsoft, okay, to Apple, to, again, in effect, all the stocks that have actually brought the marketplace to where it is are starting to, in effect, fade as the day kind of wears on. Keep that in mind, because this could very likely move, all right, from an intraday fade to a day-to-day fade where the market just starts literally hitting it right at the bell. People see a market fade enough times, okay, late in the day, they're going to start hitting it right into the cash open, okay, and you're going to get a fade that is going to continue. Now, with that, last thing I want to bring into a little bit of perspective. The S&Ps this week, all right, have had about a $57 expected move. That is plus or minus $57. That, in effect, is the expected move for the entire week. Where are we right now? And it's something I point out each and every Wednesday because I think it's critical. I mean, the entire week started right here, just around 45.10. Where are we right now? 45.22. We've moved, what, 12 points? Okay. You need to anticipate there's going to be some serious price action. And I see this week in and week out. All right, we hit this one pretty much nail on the head the previous week. Previous week of trade, we had decent price activity to the upside, hit the upper edge of the expected move. But any week we've had like literally what, 10, 12 points of price action, and yet there's a $57 expected move. Get ready to rumble, people, because again, you're going to see some big price action. And if the marketplace, as I said, continues to kind of fade, these retail clients are going to actually step in and they're going to fade it right into the opening bell. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.